Okay, hi everyone, Daryl here. Okay, so today's video, we are going to touch on how to reduce corporate tax liability through corporate tax planning. And one of the main reasons for us recording this is because we actually held a webinar and we had quite a decent turnout, but we had people who wanted to attend but couldn't attend. But I think that we realized that it's quite an important topic. Okay, how to reduce your corporate tax liability, and also we also explain what are the different forms that companies need to fill up and what are the things you need to do for corporate tax filing. Okay, so let's get into it. Okay, the corporate tax filing deadline for year of assessment 2020 is 15th of December. You will need to file either Form C, Form CS, or Form CS Lite. So for year of assessment 2020, there's this new thing called Form CS Lite. Okay, so dormant companies, right, you are still required to file your corporate income tax returns unless you've been granted a waiver of corporate income tax return submission. So how you apply for this waiver, right? You log into your IRAS portal, then you apply for the waiver from within. Okay, so companies are still required to file Form C, Form CS, or Form CS Lite even if they are making losses. Okay, so just because you're not making money and most probably you're not paying corporate tax, right, doesn't mean that you don't need to file your corporate tax. Okay, so the corporate tax rate, right, is at a flat 17%. But if you factor in all the other tax incentives which are there for Singapore companies, then the effective tax rate is a lot lower. Okay, so what is Form C, Form CS, and Form CS Lite? Form C is a corporate income tax return form for companies. Then, if your company qualifies for Form CS, it's a simplified 3-page income tax return for companies to report their income to IRAS. Then, for year of assessment 2020, which is currently where we are, there's this new item called Form CS Lite. Is to make the tax filing process even easier. So if it's a simplified annual return for companies, right, with annual revenue of Singapore dollars 200,000 and below. Okay, so if when you key in, when you go in and then you select, you want to file in Form CS, then they'll ask you how much is your revenue. Then when you put in any figure, right, which is less than 200,000, they will ask you whether you want to file Form CS. Like we have had a previous video, right, showing the steps to file Form CS. Like, so if you haven't watched it, right, you can look at our playlist, then you can take a look from there. Okay, for Form C, right, there's only one method of filing, which is e-filing. In the past, IRAS will actually send a physical copy to the company, then the directors can fill up the form, and then after that, drop it at the box in the revenue house at Novena. But then now currently, right, there's only one method of filing, which is e-filing. So we've done away with the hard copy portion. So some of you guys may still remember the previous regime whereby we could go down to IRAS and then drop it off at the box right in front of the revenue house once you enter revenue house. But now that is gone already, so you only can do e-filing, which means that you have to have your corp pass all set up, and then you log in to your My Tax portal in IRAS's website, then you do your Form C. Companies will have to attach tax computation, financial statements, detailed profit and loss statement, and other supporting documents and submit them to IRAS. This is for Form C. Okay, so how you determine whether what form to file? Okay, this is Form CS. So if your company is incorporated in Singapore and has annual revenue of 5 million or below, then you can file Form CS. Okay, and these are the other criteria. Okay, so like the company only derives income taxable at the prevailing corporate tax rate of 17% and all this. So you're not claiming of any of this. Then you can file Form CS. If not, you have to file Form C. Okay, so for Form CS, right, for Form C, you need to submit all these documents here. So your tax computation, financial statements, detailed profit and loss, and other supporting documents, you got to submit them to IRAS. So if you file Form C, you have to submit them to IRAS. But if you file Form CS, right, you're not required to submit the financial statements and tax computation, but you still need to prepare them, and then you need to keep them, because if IRAS requests, right, for them, then you need to produce them to IRAS. So this is what Form CS comprises of. Okay, so just a declaration statement of the company's eligibility to file Form CS, then the information on any tax adjustments, and then information from the financial accounts. Okay, so for year of assessment 2020, there's this new thing called Form CS Lite. The only difference between Form CS Lite and Form CS is this thing here. The company has annual revenue of Singapore dollars 200,000 or below. So if your annual revenue is 5 million and below, you file Form CS. But if the company's revenue is 200,000 or below, right, you can file Form CS Lite, which is even easier. Okay, then next, right, if your company is not a startup, okay, so if a startup, right, the first 3 financial years are considered, if your company is still within your first 3 financial years, you are considered a startup. After the first 3 financial years, your company is not considered a startup. So this is the tax relief, right, that will help to reduce the tax bill for your company. So there's a 75% exemption on the first 10,000 of normal chargeable income, then a further 50% exemption on the next 190,000 of normal chargeable income. So the first 200,000, right, there's a discount. What I mean by exemption on the first 10,000 of normal chargeable income, which means that if you earn 10,000, IRAS will disregard 75% of that. They will only take into account 25%, which is 2,005. Then they'll tax you based on as though you earn 2,005 only. So if let's say you have 120,000 chargeable income, 75,000 of $10,000, right, is 2,005. Then the remaining 110,000 is 50% discount. So you'll be taxed based on the company earning 55,000. So if you take 2,005 plus 55,000, right, is 57,500. So the tax to be paid, right, is 17% of 57,500, which is $9,775. But for year of assessment 2020, right, there's a 25% corporate income tax rebate capped at 15,000. So if your tax that you have to pay is $9,775, right, you multiply by 75%, then the company will have to pay $7,331.25. Okay, so now moving forward, right, if you are a startup, the company is a startup, which means first 3 financial years, there's a 75 exemption on the first 100,000 of normal chargeable income, then a further 50% exemption on the next 100,000. So for startups and non-startups, right, the tax exemption is on the first 200,000, but it just depends on the breakdown of the 75% and 50% only. So for the startup, right, for example, right, you have the startup has 120,000 chargeable income, so 75% of the first 100,000, right, is 25,000. So even though the company earns 100,000, IRAS takes it that the company is earning 25,000, then it tax it based on this 25,000. So the remaining 20,000 will be, there's a 50% discount, so like 10,000. So altogether you take 25,000 plus 10,000 is 35,000. So the tax to be paid, right, is 17% of 35,000 is $5,950. Then like I mentioned before, right, there's a 25% corporate income tax rebate capped at 15,000. Then you take 5,950 multiplied by 75% because you don't need to pay 25%. So $4,462.50. Okay, so you compare this, right, to this. So for personal income tax, right, the resident tax rate for the first 120,000 is $7,950. But in comparison, right, if the company earns 120,000, right, profit, the tax payable is $7,331.25 or $4,462.50 for startups. So it's actually cheaper to to start a company, and then all the revenue goes to the company, profit goes to the company, then to be a sole proprietor. So some people, they approach us and ask, what's the benefit of being a sole proprietor or a company over the sole proprietorship? Then I'll tell them that the tax rates are lower. At the same time, right, you can carry forward losses. And at the same time, if you're a sole proprietor, you open up yourself to your assets to maybe possible, if you end up being sued by someone, then you may lose your private property and your private assets. Okay, but then for a company, right, the assets are separate from the company's assets. Your personal assets are separate from the company's assets. So if the company gets sued, right, the director or the shareholders' assets cannot be touched to pay for, in the event that the company loses the legal suit. Okay, so I mentioned this thing called salary versus dividends. Some people, they set up the company as sole shareholder and sole director, which means that there's only one shareholder and one director, which is themselves. Then I always mention to them, do you need personal income? If you don't need personal income, right, then salary is treated as personal income and subject to personal income tax. But instead, right, in Singapore, every dollar can only be taxed once. So dividends that are issued to shareholders are issued after tax, which means that after the company has either set aside or paid the tax already, the remaining profit, right, can be issued back to the shareholders as dividends. Okay, so there's no need to pay dividends if corporate tax has already been paid. Okay, so this is the thing that I mentioned to them. If let's say you are sole shareholder and sole director, if you don't need your personal income tax to be high, for maybe finance purposes or something like that, then you can always let the company bear the income tax. That means the company pays corporate tax. Then after the company has set aside or paid corporate tax already, then they issue dividends over to the shareholders. Okay, so the treatment of losses, right? Singapore account allows companies to offset any trading losses against all income in the accounting period. So any unutilized losses can be carried forward indefinitely. So your company lose money like 50,000, then you can carry forward this loss to offset future profits. And to do so, right, the company must pass the shareholding test. So the percentage of shares held by common shareholders in the two relevant dates are 50% or more. So if like you want to move forward you want to carry forward the loss from last year, then last year's shareholders, right, the common shareholders versus this year's shareholders must be more than 50% for common shareholders. Okay, so there are some schemes to help reduce corporate taxes as well. I've listed out a few of them. So there's this business and IPC partnership scheme. And if let's say your company employees volunteer or provide for professional service or provide services, right, to recognize institutions of public character, or what we call IPCs, then you can have 250% Singapore corporate tax deduction. So if your company provides services amounting to 10,000, you can offset 25,000 off your profits. Then there's this regional headquarters awards and international headquarters awards. So they are administered by the Singapore EDB, and they encourage global companies to base their regional operations in Singapore. So they are issued lower corporate tax rates. Okay, so can be as low as 5%. So these are other schemes like the Pioneer Certificates Incentive and the Development and Expansion Initiative, and this double tax deduction scheme for internationalization. These are the few schemes that will help companies to reduce their corporate tax. You can read up on them, and we'll most probably do some video or blog article on them as well. Okay, so if you don't know how to file your corporate tax, right, you as an officer, you don't know how to file the company's corporate tax, right, you can appoint a third party to help the tax filing. You need to add the third party entity via CorpPass. So if you need any assistance with filing your corporate income tax, right, you may contact us. And there are penalties for non-filing or late filing of corporate tax. Okay, so if the director doesn't file the corporate tax, right, they can be taken to task as well. So these are our contact numbers. So my number is this one, then my colleague's number and email address. You can sign up for webinars, right, at companyessentialsworkshop.com, or you can visit our website. So this is the URL. Okay, this Easily platform, right, is something which we use. We use the Easily platform to put all our clients' documents inside, and then from the back end, right, they will generate out a front end portal, and then our clients can actually log online and they can retrieve their documents, moving forward. Okay, so that's all from me, and yeah, do remember to sign up and can visit our website, and I'll see you in the next video.